S&P futures are up 3/4 of a handle this morning. Um, let's take a peek at some of the commodity complex, like we like to. Crude oil's up nice 1.4%. Natty gas is up 1.57%. Gold is up 0.2%. Dr. Cop is flat this morning at 209, slightly off the year's low. There's a glut of copper out there. Coffee up 0.9%. Sugar is down 0.6%. And cotton is down 0.5%. Moving along, let's take a look at equities around the world. European equities. European equities are mixed this morning. Some down, some up. The Euro Stoxx is pretty much flat. It's up. It's actually down less than 0.1%. The FTSE's up. It's up almost 0.4%. Spain and Italy are up. The DAX and the CAC 40 are down to slightly flat. So Europe's trading mixed. We just got some news out of the ECB that they're going to leave interest rates unchanged, and they're charging a massive 0% for short-term borrowing. Again, that just came out this morning. That's the big news out this morning, is Europe keeps interest rates at 0%. The Nikkei 225 in Japan, Japanese equities traded down 0.3% last night. Looking into China, the Shanghai Composite finished up 0.1%. So, what does this mean for everybody? It really means nothing. There's no big news out as far as price action is concerned this morning. Let's take a look at some of the currency pairs. This is a Japanese yen. This is a 5-day chart. It was at 104 5 days ago, and today, survey says 101.64. That's a pretty massive move in the currency markets. So, Japanese yen taking on significant strength, and many see this as a risk-off trade. Looking at the euro versus the dollar. The euro gaining strength versus the dollar. We're looking at like over 2%. Take a look at the British pound. The pound is even pounding the dollar. It was at the highest it's been in a long time. Take a look at the Swiss franc. Yeah, it's just more of the same. Dollar has had some weakness. Dollar bulls have been called out. Let's take a look at the DXY index and just see what's going on with the 200-day moving average here. As you can tell, it keeps failing this test over here, and it didn't even make it through the 100-day moving average on this last move. So, and now, it didn't make it through the 50, and now it's through the 100, and yeah, it's shown pretty significant weakness. If the trend continues, that'll be supportive of revenues and profits for U.S. companies. Ironically, Apple just launched a new product. That product will be bought up all around the world, and those profits should come home to America, but we'll see what happens. Anyway, there's a lot of currency sensitivity for multinational corporations. So when the dollar appreciates, it puts a crimp on profits. So right now, no one really wants significant dollar strength because it'll undermine not only corporate profits, but also commodities, which are quoted in dollars. So you got to follow this. You got to follow the dollar here. Dollar weakness is supportive of asset prices, commodity prices. Now let's take a peek at some bonds. Let's take a peek at some bonds around the world. We're going to look at the sovereign bond market this morning. Prices lower, yields higher, same story. Brazil looks a little flat. Prices lower, yields higher. Prices lower, yields higher. Same. Oh, here's a buck in the trend. The pigs are out in force. The ECB's buying the pigs. Drive down the cost of borrowing for Portugal, Italy, Spain, Greece. The piggies. Um, Even Greece is getting a bid. Cost of borrowing on 10-year sovereign bonds is 8% right now. Portugal, it's 2.92. Spain, 0.9%. Italy, 1%. Versus the U.S. The U.S. the cost of borrowing is 1.5%. How is that humanly possible? Let's look at this on a chart on a little longer basis, just so we can see what direction the prices are going. So the prices have been trending upward recently. However, in the last day or so, price is trending down, yields are heading up. So here's a yield chart, and survey says we're almost back in the same position we were a month ago. So we tried to take the yields up over 160. We did so for a very short amount of time, and then voila, right back to where we started. Going into top news out this morning. Oh, there it is. The ECB keeps stimulus unchanged in sign of economic risk muted for now. The ECB affirms plan to run QE to March 2017 or beyond. It wasn't supposed to last that long. It was supposed to be over with right now initially, but they extended that. The ECB refrains from expanding bond purchases. Now, we've heard that there's companies, like, there's not too much corporate debt in certain countries. They've literally bought it all up. So, not sure how they would expand bond purchases too much more. Fiat Chrysler's rising star in U.S. swept up in criminal probe. Not bad. Trump beats Clinton among least educated whites in Bloomberg poll. That's an interesting read. Let's take a peek at that. Yeah, the race is actually tightening up. Not very interesting. Asset contagion worse than 2008 as markets held hostage to rates. This should be interesting. Memo to macro money managers who sense that diversifying funds is harder than ever. You're not imagining things. Consider Credit Suisse, known as the cross-market contagion indicator, which tracks price relationships in equities, credit, currencies, and commodities. It shows that different markets are influencing each other in 2000s at a higher rate than any time since the measure was invented in 08. Yeah, that's why asset allocation doesn't tend to work very well, is at once everything becomes correlated, we just go, we go off the charts into the deep end. Now, even in those situations, sovereign bonds, would pick up some of the slack. So if you have exposure to fixed income, high grade stuff, and country debt, those prices would go up while everything else was falling. But when you take the yields of Italy down to 1% and Spain down to 0.9, and you treat Greece like a junk bond should be treated at 8%. There's not enough junk bonds to go into, and junk bonds don't typically rally during a risk off. They actually track very closely to the Russell 2000, which is a small cap index. So who knows now what's going to happen, if the model's going to hold up or if equities are going to blow out and the correlated asset classes like fixed income and bonds everything's going to go down together from a price perspective. But um, this is a very good article, interesting article. I'm gonna read it here in a little bit. I hope you have a great day, and tune in to our Twitter handle, Outsized Return, on Twitter, and take a look at our Facebook page. We're constantly pushing out really good content, and we look forward to seeing you here in Miami. We have a lot of stuff coming up this year. We have a Beacon Council event September 21st. It's a breakfast. Um, Steve Malloy from ISAM is one of our presenters, as well as Eric Westphal from Dormouse. And it's going to be a fantastic event. We're also hosting an energy event in October. We're co-hosting a real estate family office event um, in November, the 14th and 15th. Our signature Global Macro Perspective on November 29th. And we have on December 8th, Emerging Manager Forum. Anyway, come check us out at one of these events. You know, we're really busy for the rest of the year. And we hope you have a great day and make some significant money investing.